Ivan, my dear sons and daughters, I must be very grateful to the Bank of Ceylon, the bankers to the nation, for me to invite for me to have series of seminars by targeting advanced examinations to be held in future. Here the Bank of Ceylon originated or initiated a series of seminars by mainly targeting the advanced examinations to be held in future. This concept is known as NanaJaya, initiated by Bank of Ceylon. Under this series of seminars, we are mainly focusing the examinations to be held in the future. So here we are mainly targeting the main areas in the syllabus. We are targeting main areas in the syllabus in the examinations, the examiner's main target area. So initially I decided to discuss the non-profit making lesson, unit number 8 in the syllabus, non-profit making lesson. And here in the non-profit making lesson, before starting the questions, I mainly target to brief the lesson. In the non-profit making organization, as an introduction, in the organization, the non-profit organization, the mainly their accounting system. The based on the purpose of organizations, we divide into two, profit making organization and non-for-profit organization. The profit making organization and non-for-profit organizations. In the syllabus, we identify this as the unit number 8. We identify this as unit number 8, non-profit organization. They are mainly focusing main accounting areas. Non-profit organization, even though their main objective is not to provide profit earning activities or not to earn profit, their main focus is to provide social services. Even though they don't want to make profit, they are day to day they are entering into many transactions. The volume of transactions, substance of transaction is comparatively higher. Then there is a requirement to maintain a set of prime entry books and ledger accounts with the financial statements. When you discuss non-profit making organization, they are maintaining a cash account, or we call receipts and payments account. Cash account or receipts and payments account. In the cash account, this is same as the cash account maintained by profit making organization. The main purpose is to identify the cash balance. To learn to prepare the financial statements, we have two methods, cash basis and accrual basis. So here we use the cash basis. Only cash receipts and payments we record in the receipts and payments account. The main purpose to identify the cash balance. And in accounting, you have short-term transactions, long-term transactions. In accounting, you have long-term transactions, short-term transactions. In the cash account, you record both short and long-term receipts and payments. Then the income and expenditure account or income statement. This is similar to the income statement maintained by profit making organization. Here the main purpose is to identify the operational results. By operating the organization, whether you got a profit or a loss. So here we call surplus or deficit. But in the cash account, we recorded only cash transaction. Receipts and payments. Here we record income and expenses. As the name says, income and expenses. The purpose is to identify the operational results. So here we record only short-term transactions. Right. If you compare the profit making organization and non-profit organization. In a profit making organization, you have statement of profit or loss. Statement of profit or loss. Non-profit making organization, we have income statement. Income statement. In a profit making organization, we call net profit. Income minus expense, we call net profit, but when it comes to profit non-profit organization, we have surplus or income over expenditure. The non-profit profit making organization. The profit making organization, if your income less than the expense, we call net loss. But profit making non-profit organization, we call deficit or expenditure over income. And if you compare income and receipts and payments account and income and expenditure account, you can mainly identify these areas. Right? The receipts and payments account, you record only cash receipts and payments. Cash receipts and payments. But income and expenditure account, you record income and expenses. So here receipts and payments, here income and expenditure. This receipts and payments account is similar to a cash account. But income and expenditure account is similar to an income statement. Right. Receipts and payments account to identify the cash balance. Income and expenditure account to identify the operational results. By operating the organization, whether you got a surplus or deficit. Then receipts and payments account you prepare on cash basis. This is on accrual basis. To the non-profit organization, the next area in the non-profit organization, the main income. If you take trading organization or service organization, so their main income is sales or service income. Trading organization, they are doing buying and selling. Their main income is sales. Service organization, they provide services. But when it comes to non-profit organization, their main income is subscription or members fees. The main income is the subscription or members fees. Right? When you are collecting this subscription, you may collect on monthly basis or quarterly basis, annual basis. In the collection, you can use different bases in the collection, but you record under accrual basis. When you identify the annual income, you have to make adjustments for subscription receivable, or we call in arrears, and subscription in advance. You have to make two adjustments for subscription receivable or in arrears and subscription received in advance. The subscription receivable or in arrears is an asset to the organization. Why? It is still receivable. Why? Members, they haven't paid yet. Why? The organization has to collect this. From members. It is an asset. That's why we debit in subscription arrears. You debit. You debit subscription in arrears. Why? It's an asset. As it is an asset, you debit. Subscription account, you credit. Then subscription in advance. The subscription in advance. Subscription in advance is a liability. The subscription in advance is a liability. You subscription in advance you credit, while it's a liability. Subscription in advance is a liability, you credit. The subscription account debit, subscription in advance credit. Subscription account debit, subscription in advance credit, why it's a liability. So these are the two main adjustments you have to make in the adjustment of subscription. You have to make two adjustments, for in advance and for in arrears. For in advance and for in arrears. Now you come to the subscription account. The subscription account. So mainly in a subscription account, you have 7 entries. In a subscription account you have mainly 7 entries. Opening balance is opening receivable, then opening balance, the credit side, opening balance, credit side, opening advance. Now the same way you have the closing date also. The same way you have at the closing date also advance and arrears. Opening arrears. Opening arrears you debit is an asset, then closing arrears or closing receivable. Opening advance, the opening advance credit. The closing advance debit side you take the next financial year. Next financial year. But here what you have to do is, when these adjustments, then you are adjusting this. When you are adjusting subscription account, when you are adjusting subscription account for the year, we have to make these adjustments. We have to make this adjustment. Receivable received in advance. The receivable and received in advance. Opening receivable you debit asset. That has become a closing receivable at the end of previous year. Closing receivable at the end of previous year. Then opening advance was a liability for the previous year. Was a liability for the previous year and credit balance in the subscription account. Then the cash received. Cash received. The cash received, you identify the total amount received. The total amount you received. This is total cash received. This is total cash received. So maybe for last year's, maybe for this year, and maybe for next year's. This is closing received. The closing cash received. Total cash amount received. Maybe for current year, or maybe for last year's, or maybe for future years. Total cash received. And here, subscription written off. The later we are discussing subscription written off. Then income and expenditure amount. This is income and expenditure amount. In the income and expenditure account, this is the income for the year. This is the income for the year. How you calculate that? If you have 100 members, say you have 100 members, you have 100 members, each member have to pay 2,000. This is your income for the year. This is your income for the year. Number of members into annual membership, income for the year. Number of members into annual membership for the year. Then the closing balance, this is closing advance. So by the end of the financial year, certain members they have paid for future. Certain members they have paid for future. So it's become a liability for carried down balance. So this is closing receivable. Closing receivable. So this closing receivable, say your financial year ends on 31st March. Your financial year ends on 31st March. As at 31st March, total amount receivable. Total amount receivable. So this may be for last year's, maybe for this year, or as at this date. As at this date, total amount receivable. The total amount receivable you identify as closing advance. So then these are the 7 adjustments, 7 entries in a subscription account. 7 entries in a subscription account. Opening receivable, closing receivable, opening advance, closing advance, cash received, subscription written off, and income for the year. So these are the main 7 entries in a subscription account. Main 7 entries in a subscription account. Opening receivable, opening advance, cash received, written off, closing receivable, closing advance, and income for the year. Income for the year, total subscription income. Right. And then the subscription income in an organization, non-profit organization, you have subscription written off. You can have subscription written off. If the members, they don't pay subscription as scheduled, or if the members, they don't pay subscription as requested by the organization, then you decide to write off it. You decide to write off it. Why? Members are not paying. In this subscription written off, you may have written off. You may have written off based on different policies. So sometimes you will cancel the membership and write off the arrears. You will cancel the membership and write off the arrears. Due to certain reasons, member can't pay for some period. Say one of your member, he underwent a surgery or his business collapsed, then he can't pay subscription. So in that situation, you don't cancel his membership, you cancel only the amount arrears. You cancel only the amount arrears. So then subscription you can write off. You can write off by cancelling the membership or without cancelling the membership. Right. Then in a non-profit organization, non-trading organization, not-for-profit organization, you can have life membership. Life membership fees. Certain members, they don't want to pay annual or quarterly basis, then by paying a considerably higher amount, you can become a life member. You can become a life member, then he no need to pay annual subscription. Life members, once you pay a bulk amount, you can become a life member. So we call life membership. But when you identify, when you are recognizing the income for the year, you have to consider both general members' income and life members' income. And the other concept in non-profit organizations, you can have interest fees or admission fees. When a new member comes in, or when a person newly joins the organization, he has to pay an admission fee, entrance fees, in addition to the subscription. In addition to subscription or members fees only, the member has to pay this entrance fees at the joining of the organization. When a member newly joins the organization, he has to pay this entrance fees. You have to pay this entrance fee. A member has to pay an entrance fees in the admission. But this is not a continuous payment. This is not a continuous payment. Member has to pay on his admission only. On his admission only, he has to pay this subscription or members fees. When a person newly joins the organization, you have to pay this admission or entrance fees. Annually, he is not supposed to pay the membership fees. And the non-profit making organization, you can have donations. Non-profit organization, you can have donations. These donations received, the organization can receive donation as well as organization can donate. when the organization donates, you record as an expense. But when the organization receive donation, when you receive donation, you identify the purpose. When you receive the donation, you identify the purpose. Why you have received this donation? Purpose of the donation. You identify the purpose of donation. Whether it's for a specific purpose or a normal donation. Whether it's for a specific purpose or for general purpose. The general donation, you have no purpose. You collect cash or goods or any other source for your day-to-day income. You can record as an income. But the special situation, you can get donation for a specific purpose. Special donations. As an example, say your school collects money to construct a swimming pool, or your school collects money from parents to construct an auditorium or to construct a sports complex. We identify them as special donations. Why? You have collected it for a specific purpose. Special donations. The non-profit organization. Non-trading organization may maintain special funds also. Let's say school has, your school may have prize giving fund. So sometimes your school has an auditorium fund used for the auditorium activities. Say prize giving fund for the activities related under prize giving. The annual prize giving, or you can maintain a prize giving fund. These are the non-profit making organization different activities. Non-profit organization. Right. As we told, non-trading organization or non-profit organization. Right. Non-profit organization or non-trading organization as a fundraising activity. You can have trading activities. They are having their main objective is to provide social services. You can have other activities as fundraising activities. The school may have canteen. School has a canteen, or the school may have maintaining a swimming pool, renting. As a source of income, they rent their swimming pool, or auditorium you rent. You can rent. These are called trading activities. Why they maintain that? As mainly a fundraising activities for their social service activities. They want funds. As a fundraising activity, you can maintain this non-trading activities also. Right. So when you maintain accounts, if you are giving a main attention for these non-trading activities, you can maintain separate sets of accounts. If you are giving main attention for non-trading activities, example, your school canteen is a main source of income. Then you can maintain separate set of accounts for the canteen. You can maintain a separate set of accounts for the canteen to identify the canteen profit or loss. So if your school main auditorium is a main source of income, then you can maintain separate sets of accounts for non-profit, this profit making activity. Right. Then the accumulated fund. In a non-profit organization, right? Accumulated fund. Right. And you can remember the trading organization. assets minus liabilities we identify as equity. In a trading organization, assets minus liabilities we identify as the equity. So when it comes to non-profit organization, we replace this term as accumulated fund. The profit-making organization, assets minus liabilities we identified as equity. The same concept, non-trading organization, we call equity. So then non-trading organization, non-profit organization, accumulated fund means the difference between assets and liabilities. In the non-profit organization, a statement of financial position. Right. The profit-making organization, your main elements, the non-current assets. In the financial position, main items in profit-making organization. Non-current assets, the current assets, equity, non-current liabilities and current liabilities. These are the main 5 elements in the statement of financial position of a profit-making organization. Right. The same principle we use here in the statement of financial position prepared by profit-making organization, non-profit. These are the main 5 elements in the financial position of a profit-making organization: non-current assets, current assets, equity, non-current liabilities and current liabilities. Right. In the non-profit organization, right, is for same. But equity, the profit-making organization, how you presented the equity? In profit-making organization, how you presented the equity? In a profit-making organization, you presented your equity. In profit-making organization, this is how you presented your equity. You presented your equity. You take the opening capital. If you have additional capital, you added net profit and minus drawings. So these are the items in the profit-making organization. Equity, the capital plus any additional capital, then plus the net profit and minus the drawings. This is how you presented the equity in profit-making organization. For the opening capital, you added your additional capital and you added your net profit and you deducted your drawings. Right. So when it comes to non-trading organization, equity section. Instead of capital, we write accumulated fund. Then if you have surplus, you added, and if you have a deficit, you deducted. Surplus you add and deficit you deduct. The surplus means if your income is greater than expense, we call surplus. When your income is greater than expense, we call surplus. Or income over expenditure. So when your expense are greater than income, you have a deficit. These are the two concepts. When your income is greater than expense, we call surplus. When your expense is greater than income, we call deficit. Those are the concept in the non-profit organization. These are the basic concept in non-profit organization under the syllabus advanced level accounting. So these are the main points. These are the main point is non-profit making organization syllabus. Again, if we brief it, non-profit organization, to brief it, cash account and receipts and payments account, income and expenditure account and income statement, and we compared profit or loss, profit making and non-profit making, profit or loss, income and expenditure account, and net profit we call here surplus or deficit, surplus or income or expenditure. Then net loss, non-profit making organization we call deficit or expenditure, deficit or expenditure. Then the next area we discuss differences between receipts and payments account and income and expenditure account. Receipts and payments account and income and expenditure account. The receipts and payments account, receipts and payments, but income and expenditure account, income and expenses. The receipts and payments account similar to a cash account, income and expenditure account similar to an income statement. The main purpose of receipts and payments account is to identify the cash balance. Income and expenditure account to identify the operational results. So by operating, whether you want a surplus or deficit. The receipts and payments account under cash basis, income and expenditure account on accrual basis. Those are the main. Right. And then we discuss subscription or members fees is the main income. When you go to profit making organization, the main income is sales, but non-profit organization, subscription or members fees. You make two adjustments for receivable and received in advance. Right. Then we discuss subscription account. Subscription account. In a subscription account, mainly you have 7 items: opening balance, opening receivable, credit side opening balance, opening advance, closing advance and closing receivable, cash received, written off, and income for the year. Income for the year, subscription. Right. And the subscription members fees written off we discuss. Right. The members fees written off we discuss. There you can cancel his membership, or without cancelling the membership you can write off. We discuss life membership fees. Certain members, they don't want to pay annually or quarterly, then you introduce them life membership fees account. Then the entrance fees. When new member comes to the organization, he has to pay entrance or admission fee. His entrance fees, admission fees, at once only pay. Later on you no need to pay. Like membership fees, the membership fees you have to pay based on quarterly basis or monthly or annually, semi-annually basis. You have to pay membership fees, but entrance fees you pay when a new member comes to the organization. Right. Then the donations. Non-profit making organization may donate. It's an expense. If you receive donations, you have to identify whether you have received for a specific purpose or whether day-to-day general activities. Now, the non-profit organization, they maintain special funds. They maintain special funds, prize giving fund, auditorium fund, as they are part of accounting system. And the non-profit organization, non-trading organization, they may have trading activities. They may have trading activities as fundraising activity. As fundraising activity, they may have trading activities as fundraising activities. School may have swimming pool hiring, or auditorium renting, or sports complex you will hire. The accumulated fund. Equity of a profit making organization we call the accumulated fund. We call the accumulated fund. Then the financial position. So finally, the financial position main items we discuss. That's a summary of the lesson. The summary of the lesson. The So why did I think this? To summarize the lesson, so basically, if you have proper theoretical knowledge, right? If you have proper theoretical knowledge, then whatever the questions is creative, you can answer. You can have answers, you can build up answers when you have sound theoretical knowledge. This is a brief of the lesson. Right. Now from this point onwards, we'll discuss the questions. We'll discuss the questions by covering the areas we discussed under lesson. Right. The first question, the question number 1. What are the main financial statement? If you refer to 2018, the advanced level paper, this as a MCQ. This as an MCQ, the examiner has given you separate set of financial statements. What are the main financial statements prepared by non-profit organization or non-trading organization? The financial statement, right? And then these financial statements are prepared by non-trading organization. We discussed already. You can have receipts and payments account, or we call cash account. That's one of the main financial statements they maintain. Receipts and payments account, or we call cash account. In the non-profit making organization, they have income and expenditure account. Income and expenditure account, or we call statement of profit or loss or income statement. Statement of profit or loss or income statement. The third financial statement, they maintain a statement of financial position. The statement of financial position. Statement of financial position. Third financial statement. And the statement of cash flows. Statement of cash flows. Also they prepare under their set of financial statement. Receipts and payments account, or we call cash account. Income and expenditure account, we call income statement, and the statement of financial position, statement of cash flows. Right. Now, what are the purpose of this? Is in addition to the question purpose. Receipts and payments account, purpose to identify the cash balance. Identify the cash balance. Income and expenditure account, to identify the operational results. To identify the operational results. By operating the organization, whether you got a surplus or deficit. Then the statement of financial position. As the name says, the purpose is to identify the financial position. To identify the financial position. The financial position means assets, equity, liabilities. To identify the assets, equity and liabilities. Then the statement of cash flows. Statement of cash flows. And then the advanced level syllabus, we don't have cash flows to non-profit organization to prepare cash flows. For the purpose of a cash flow, you identify to identify the changes in cash and cash equivalents. Right? Again, these are the main financial statements. Receipts and payments account, income statement or income and expenditure account, statement of financial position, and statement of cash flows. These are the main financial statement maintained by profit or non-profit organization. These are the main financial statements maintained by non-profit organization. These are the main financial statement maintained by non-profit organization. When you come to the main two financial statement, the previous question we discussed, we gave example for main four financial statements. So here question number 2, The question number 2. Distinguish between receipts and payments account and income and expenditure account. To distinguish between these two financial statements based on in relation to the their purpose and basis of preparations. The question is distinguish between receipts and payments account and income and expenditure account in relation to their purpose and the basis of preparation. And at the introduction we discussed, we compared these two accounts. We compared these two financial statements. The purpose to their purpose and basis. Their purpose and the basis. The purpose. Receipts and payments account main purpose is to identify the cash balance. Income and expenditure account main purpose is to identify the operational results. Surplus or deficit. Receipts and payments account main purpose to identify the cash balance. Income and expenditure account main purpose to identify the operational results. Surplus or deficit. The basis of preparation. Why you prepare this? Basis of preparation. And so you have two bases to prepare financial statements: cash basis and accrual basis. To prepare the financial statements, you have two bases: cash basis and accrual basis. The receipts and payments account you prepare on cash basis. The income and expenditure account you prepare on accrual basis. Receipts and payments account cash basis. Income and expenditure account accrual basis. The receipts and payments account cash basis. Income and expenditure account accrual basis. The purpose and basis. The next question. The question number 3. To name the financial statement. Of non-profit organization from which the following items can be identified. Here to name the financial statement. To identify it properly, what's the question point? Name the financial statements. To certain papers you have named the source, but here the question concerns the financial statement. From the following information could be obtained. Financial statement. The subscription income recognized. The income recognized, from the name you can identify income and expenditure account or income statement. Income recognized, income statement or income and expenditure account. The second one, B, the subscription income received. Income received. The previously income recognized, this is income received. As the name says, we can say receipts and payments account. We can say receipts and payments account or cash account. So question number 3 part C, subscription in arrears. The subscription in arrears. The subscription in arrears at the end of the year. The subscription in arrears at the end of the year. At the end of the year. In arrears at the end of the year. So how can we identify subscription arrears at the end of the year? At the end of the year. Subscription arrears at the end of the year. At the end of the year, you prepare the statement of financial position. In arrears at the end. At the end, you prepare the statement of financial position. There you can identify the in arrears at the end of the year. Right. Then subscription received in advance. The received in advance at the end of the year. The received in advance at the end of the year. The previously arrears at the end. This is advance at the year end. In advance is a liability. In advance is a liability. You can identify it through the statement of financial position. You can identify that through the statement of financial position. Again, income recognized, income and expenditure account, and income received. Income received you can identify through income and expenditure account or income statement. In arrears at the end of the year you can identify through the statement of financial position, and in advance at the end of the year in the financial position. Okay. So these are the answers. This cash received, receipts and payments account or cash account. Income recognized, income and expenditure account or income statement. In arrears, statement of financial position. In advance, also statement of financial position. Income received, the receipts and payments account. Income recognized, the income and expenditure account. Income recognized, income and expenditure account or income statement or income and expenditure account, and income received, cash account or receipts and payments account, statement of financial position. Income recognized, income statement or income and expenditure account. Income received, cash account or receipts and payments account. Income in area, financial position. Advance also a financial position. These are the main financial statement where you can identify the financial statement. You can identify where these the question was the financial statement. Okay. The question was the financial statement. Okay. So if it was name the source. Now how you can identify the income? When it says source, you can write subscription account also. To identify the income, if the question was source, you can write a subscription account also. So the next question, to question number 3 we discuss. The fourth question. To question number 4. Right. The following information is related to subscription. It's related to subscription of an organization for the financial year. For the financial year ended 31st March 2021. In preparing the subscription account, identification of the financial year is very important. The financial year ended 31st March 2021. The first one, subscription received during the year. Subscription received during the year. When it says during the year, received during the year, this may be for current year. This may be for current year. When it says received during the year, may be for current year. May be for current year. Sometimes it may be for last years. May be for future years. Received during the year, may be for current year, last years and future years. Now during the year 2021 mean maybe for 2020, 19, 18 or 22, 23, 24. The receivable at the beginning. The receivable at the beginning. When it says receivable at the beginning, opening receivable, or we can say opening arrears. So we can say opening receivable or opening arrears. The receivable at the beginning. This is receivable at the end. This is receivable at the end. Up here, receivable at the beginning. This is receivable at the end. Opening receivable and closing receivable. The subscription received in advance. The received in advance we identify as liabilities. The received in advance we identify as liabilities. The receivables are assets. The receivables are assets. Received in advance are liabilities. These are liabilities. Requirement: calculate the subscription income for the year. Income for the year. You have to calculate the income for the year. Income. You have to calculate the income for the year. Income means the amount you identify for the financial year. This income should be equal. If you know the number of members, when you multiply by membership fees per year. Now say example, if you have 100 members, when you have 100 members into 2000, say annual membership fees, that is your income. The members fees, the annual membership fees income equal number of members into membership fees per year. Number of members into membership fees per year equal annual membership fees. This is the summary of the question. This is the summary of the question. After with this, we'll do a subscription account for the example we give. Subscription account we'll do for the example question number 3. Right. So as per the paper you downloaded, you can try this question number question number 4. And the fourth question, I brief you again, question number 4 here, question number 4. The fourth question, question number 4, you can prepare the subscription account to identify the subscription income. You can prepare the subscription account to identify the subscription income. And then a subscription account, you have here 7 items I explain you. The opening receivable, opposite to that you have closing receivable, opening advance, the closing advance, and cash received or receipts and payments account, subscription written off, and income for the year. Income for the year, income and expenditure account or income for the year. So these are the main 7 items in a subscription account. This is called the subscription account or membership fees account or members fees account. Opening receivable, opening advance, income and expenditure account, receipts and payments account, written off, and closing receivable and closing advance. Right. Now here you have 7 items. Here you have 7 items. So then using this account, you can calculate the missing figure. So the question number 4. The subscription received during the year. When you prepare this account, say you are preparing in thousands, you prepare in 1000. Right? The first one, we are discussing this question number 4. Subscription received during the year. So received during the year 950,000. Right? So received during the year is 950,000 rupees. The receivable at the beginning, the opening receivable 70. Right? The 70,000 is the opening receivable. The subscription receivable at the end. Subscription receivable at the end. And the subscription received in advance. Subscription received in advance at the beginning 40. At the beginning 40. At the beginning 40. Close in advance 60,000 rupees. Close in advance 60,000 rupees. Then what's the requirement? Calculate the subscription income for the year. Income for the year. Income for the year. But there is another missing value which is written off. There is no information on that. We assume there is no value in written off. There is no value for this written off. Then income you can calculate. Right? Again, opening receivable, opening advance, closing receivable, closing advance, receipts and payments account, cash received. And you can calculate the income for the year. How we calculate? Usual way, you balance the ledger account. Now to get 0, 5, 1050. You get 1050 and you can write it here, difference. The 920 is the income for the year. 920 is the income for the year. Opening receivable you debited is an asset. Closing receivable, opening advance credited, closing advance. The cash received, cash account debit, receipts and payments account or cash account. Then income for the year. Income for the year. Subscription account. And what you have to keep in mind, this is cash received. So this is cash received. The cash received means total receipts during the year. It's total receipts during the year. The total receipts includes last year's, maybe current year, or for the future period, close cash received. Right? So when it comes to closing receivable, the closing receivable means at the end of the financial year, total receipts, receivable, total receivable. So by the end of the financial year, so maybe for current year or previous financial years. And the closing advance mean by the end of the financial year. So by the end of the financial year, you may have received for next year or next years. If you are in 2021, maybe for 2022, 23, 24 in the future financial year. Right. Subscription income for the year. Right. The question number 5. The question number 5. Right. And in the question number 5, it's the next question, number 5. The following information is related to the subscription of a sports club for the year ended 31st December 2020. Right? This is 31st December 2021. Right. So here also we identify the financial year. Here we identify the financial year 31st December 2021. 31st December 2021. The subscription in arrears asset. Right. So this is opening receivable. Right. This is opening receivable. Right. Opening receivable. At the beginning of the financial year, this is opening receivable. Opening receivable. The subscription received in advance. Subscription received in advance as at 1st January 2021. This is opening advance. Opening advance. And the subscription received during the year. The subscription received during the year. Subscription received during the year. So during the year. So when it says during the year, it may be for last year's, current year and future years. When it says during the year, it may be for last year's, current year and future year. Close. Total received. This is total receipts. Total receipts. Total cash receipts during the year. Current year putta here 2021. Current year 2021. So 2020 is the previous year. 22 is the next financial year. So this is closing total receipts. The total receipts where you record? We record in the receipts and subscription account. Total receipts, what the double entry? The total cash received, cash or receipts and payments account debit, this value, cash debit, and the receipts subscription account credit. This total amount received, the total amount received, the total amount received, double entry, cash account debit, receipts and payments account debit or cash account debit, the subscription account credit. Then for this the subscription in arrears asset, subscription in arrears asset, closing date. The subscription arrears at the end of the year. The subscription arrears at the end of the year. This is close in arrears or close in receivable. The close in arrears or close in receivable. The subscription close in arrears, close in receivable. Right. And in this subscription account we have 7 items: open in arrears, open in advance, cash received, close in arrears, close in advance, income and expenditure account, and written off. Income expenditure account or written off. This now opening receivable we have. Opening receivable we have. The opening advance, close in receivable, cash received. Directly you can identify 4 items: opening receivable, opening advance, cash received, and close in arrears. Close in arrears. You have opening receivable, opening advance, cash received, close in arrears. Right. So here you have during the year. Right. Here you have during the year. So during the year received. So during the year received includes. So during the year includes next year received. The cash received during the year include 43,000 rupees received for next year. The 43,000 received for 2022. 2022. This is what close in advance. Close in advance. Close in advance. You have open in receivable, open in advance, cash received, close in arrears. Now we found close in advance. Now you found close in advance also. Now what's the requirement of the question? Using the above information to prepare the subscription account for the year. Prepare the subscription account for the year. Right? And you can identify the subscription. Now the question is clear. You had open in arrears, you had open in advance, you have cash received, you have close in arrears, and we found close in advance also. Right? So we will prepare the subscription account. Right? And so you can draw the subscription account again. You have the items we did earlier. Right? Same subscription account, the 7 items we did. Right. So now the question number 5. The question number 5. We'll do in 1,000 rupees. Then I'll use the same format I used for the previous question. Question number 5. Right. I explain you, in a subscription account you have 7 items. In a subscription account you have 7 items. Open in receivable, open in advance, close in receivable, or close in advance, written off, cash received, and income and expenditure account. Right. So you found it. If you refer to the question paper you have with you now, question number 5, subscription in arrears. At the beginning, 72,000. You can record it here. 72,000. The subscription received in advance at the beginning, 92,000. You can record here. 92,000. Now the subscription received during the year. Right? Subscription received during the year, 72 plus 1245, 1245 and plus 43,000 you have received for next year. The 72 for last year, 1245 for the current year, plus 43,000 rupees for this year. Addition comes to 1,360. 1,360 is the cash amount. Is the cash amount. Is the cash amount. Listen. And here in this cash, in the cash receipt, we don't worry about the year. In the cash receipts, we don't worry about the year. Total cash received. Total cash received you record here. Where's the debit entry? Receipts and payments account. 1,360. And here, this 43,000. The 43,000 you received for next year. 43,000 you have received for next year. The 43,000 as you have received for next year, in other terms, it's our closing advance. The amount you have received for next year is the closing advance. And the closing receivable is given 54,000 closing arrears. 53. So this is given in the question clearly, directly. 43,000 closing advance arrears. Now there is no information on written off. You can calculate the missing value. You can calculate the missing value. Opening receivable, opening advance given directly. Closing receivable also given. The closing receivable also given. The closing receivable given. Then closing advance. Closing advance, we found it. Closing advance we found, and cash receipts, total receipts. Total receipts also we found. And you can balance the account and get the difference. You can balance the account and get the difference. So you will get the difference in this account as a subscription income for the year. Income for the year, you get 1,390. To 6. To 1,496 addition. 2 plus 4, 6. 1,506. 1,506. The difference you get 1,391 income for the year. You get the total addition. It comes to 1,506. You bring that to the other side, and income for the difference is the income for the year. Opening receivable, closing receivable, opening advance, closing advance, cash received, as there is no information about written off, then income for the year. Income for the year. That was the answer for question number 5. The question number 5. Right. Then we will go to the question number 6. We will go to the question number 6. Right. To question number 6. The following information related to a sports club for the end at 31st December 2021. 31st December 2021 is their financial year. Right. The number of members 200. The sports club, they have 200 members. They have 200 members. Right. The monthly subscription per member. Monthly subscription per member. The members monthly subscription. Right. Members monthly subscription is 1000 rupees. Members monthly subscription is 1000 rupees. Then how much is the annual subscription? 1000 per month into 12. 1000 per month into 12 is the annual subscription per member. The annual subscription per member is 12,000 rupees. Right. The subscription in arrears. The balance as at 1st of January. The balance as at 1st of January. Then this is opening balances. Opening balances. Opening balances. This is opening balances. Opening balances. The subscription in arrears. The opening date. Opening date subscription in arrears. The opening arrears. Opening arrears is the opening date, opening arrears, opening arrears. The 4 members for 2 months. 4 members for 2 months. The 4 members 2 months monthly subscription 1000. The subscription in arrears 4 members 2 months. 4 members 2 months monthly 1000 rupees plus the 6 members for 1 month. The 6 members for 1 month. The monthly subscription is 1000 rupees. That is opening arrears. The 4 members 2 months monthly subscription 1000. The 6 members 1 month. 6 members 1 month. The monthly subscription is 1000. Right. The subscription received in advance. The subscription received in advance. Advance. The 8 members. 8 members for 2 months. Monthly 1000. Right? 8 members for 2 months. Monthly 1000 plus the 6 members for 1 month. 6 members for 1 month. Again, balances as at 1st January 2021, opening balances 4 members for 2 months. 4 members for 2 months. 4 members into 2 months, 1000 rupees. The 6 members for 1 month. 6 members, 1000, 1 month. The subscription received in advance. Subscription received in advance, that is opening balance. 8 members for 2 months. 6 members for 1 month. 8 into 2 into 1000. So why do we multiply by 1000? Their monthly subscription is 1000. Remember, this is the balances as at 31st December. The balances as at 31st December. This is closing balances. Closing balances. Closing balances. The subscription in arrears. The subscription in arrears. The 5 members for 2 months. The 5 members for 2 months, monthly 1000. Monthly 1000. The 5 members for 2 months, monthly 1000. In advance, the 12 members for 1 month. 12 members for 1 month. In previous examples we discussed, directly you had financial values. Directly you had financial values, but here you have to calculate the values using number of members into membership fees per year. Now you have income you can identify, receivable balances, advance balances also there. Right? Most of the areas in the subscription account you found. Income, monthly income, annual income. You can calculate the full annual income. You have 1000 rupees per month. By a member you have to pay for 12 months. So there you have 200 members. Sorry, you have 200 members. This is your income. This is your income. The income equal monthly subscription into 12 months by 200 members. This is the summary of the question. So this is your annual income. This is your annual income. 1000 rupees, 12 months, 200 members. With that you can prepare the subscription account. You can prepare the subscription account. So I'll use the same subscription account I discussed for the previous question. Same subscription account used for the previous question. There you can calculate the previously we discussed question number 5. So now we are discussing question number 6. Question number 6. You can use the same subscription account to question number 6. And then we discuss the question how to get these values. I'll do again with calculations. We'll take one by one. To question number 6. Number of members 200. The number of members 200. Monthly subscription 1000. Here you can calculate monthly subscription 1000 for the year 12 months, and you have 200 members. You have 200 members. 200 members. This is your income. This is your income. This is your income. 1000 per month for the year 12 months. You have 200 members. You have 200 members. This is your income. This is your income. Clearly you can record in the income column. That is 2,400,000. That is 2,400,000 is your income. Your income is 2,400,000. Your income is 2,400,000. Income for the year. Right. Opening balances. The opening balances. The subscription in arrears. The annual income, no issue. It was 2,400,000. Annual income 2,400,000. Now the opening balance, opening receivable. The question we discussed previously how to get these values, opening receivable. The question says part C, balance as at 1st January 2021. The balance as at 1st January 2021. In arrears, the 4 members for 2 months. 4 members, monthly 1000 for 2 months. And plus 6 members for 1 month. 6 members for 1 month. 4 members, 1000 into 8000 plus 6000, open in arrears 14,000. Open in arrears 14,000. Right. And the closing and opening advance. Part C says subscription in advance. This value, the opening value. 8 members for 2 months. 8 members for 2 months plus 6 members for 1 month. 1 month 1000. 8 members for 2 months, 6 members for 1 month. 8 into 2 6, 8 into 2 16 plus 6000, 22,000 rupees. 22,000 rupees. That is opening advance. The part D, the balance as at 31st December, closing balances. 31st December balances are closing balances. Closing balances. The subscription in arrears to this value, the 5 members. 5 members for 2 months, monthly 1000. 5 members, 2 months, monthly 1000. The value is 10,000 rupees. Value is 10,000 rupees. In advance, 12 members. 12 members for 1 month. 12 members for 1 month, 12,000 rupees. 12,000 rupees. 12 members, 1 month, 12,000 rupees. Right? To know information on subscription written off, you can calculate the cash received. So this question requirement is cash received. Why? We have opening receivable, opening advance, closing receivable, closing advance, income for the year. Income for the year, and no information written off, you calculate the cash amount. You calculate the cash receipt. Right. So you have the highest total here, the 2,426. 2,426. 2,426. Bring it here. 2,426. So you can calculate the missing value. 4,932. 2,394. It's the cash received. This is the cash received for the year. This is the cash. So in this question, we calculate the cash received. All other items we had. All other items we had. Then we can calculate cash received. And up to now we discussed how to prepare the subscription account. And subscription account we had 7 items. Subscription account we had 7 items. In the subscription account we had 7 items. And just out of these 7 items we discussed 6 items. But none of the question we discussed so far you had written off. So none of the question you discussed so far you didn't have written off. So here we'll do subscription written off. So have a look at the question number 7. Right. The following information, right? Following information relates to. Right? The following information relates to sports club. Right. The subscription in arrears for 2018 as at this date. Right. The subscription received arrears as at this date. Right. Subscription received for the year during the year. $200,000 rupees. And the year here you had arrears of 500,000. You received 200,000. So still you have to receive. Still you have to receive 300 rupees. So still you have to receive 300 rupees. Answer for this. Still you have to receive 300,000. On 1st April 2021, the committee has decided to write off 60% of this. The committee has decided to write off 60% of this. 300 received, but still organization has decided to write off 60%. Then you are writing off 180,000 rupees. 180,000 rupees. So here you have to receive 300,000. 300,000. You write off 60% of that, which is 180. So you have to receive still 300,000. From that you write off 60%, that is 180,000 rupees. The 180,000 rupees. In arrears for 2018, 500,000 minus 200,000, 300,000 to be written off 60% of that 180,000 rupees. This is clear the answer. Part 1 300,000. Part 2 you write off 60% of that. The organization decided to write off 60%. The organization decided to write off 60%. 300,000 still receivable. 60% write off mean still you are writing off the 60%. Then balance 40% still you identify as receivable. The balance 40% still you identify as receivable. So question number 8. Right. So up to question number 7 we discuss subscription account. So question number 7 we discuss how to write off and combine question with the subscription written off. Right? It is a question. Question number 8. We'll go through the question step by step. The following information identified for the year ended 2021. Again, the financial year 31st December 2020. 31st. The balance as at 1st January, opening balances. Opening balances. This is opening balances. Under that you have two items. Subscription received in advance. Opening advance. Subscription account where you record in the credit side. Subscription account, opening received in advance. Subscription account you record in the credit side. The subscription in arrears. Subscription account, opening arrears or receivable. Opening arrears or receivable you record in the debit side. If you are doing the question, you can draw and update it. In advance, credit. In arrears, opening debit. Right. The balances as at 31st December. 31st December. The received in advance or close in advance. The close in advance. The close in advance 7,000 rupees. Right. The subscription in arrears. 12,000 rupees. Subscription arrears 12,000 rupees. The subscription arrears 12,000 rupees. You can use the same subscription account to prepare this. This question, it says subscript third one says refer fifth one. To refer fifth adjustment. It says to organization. Fifth adjustment is linked with the same question. On 31st December 20, the management committee has decided to write off 8,000 rupees. Now the previous one, it says refer adjustment 5. Refer adjustment 5. But here in adjustment number 5, in adjustment number 5 says 8,000 is the subscription in arrears mentioned above is the amount before writing of subscription. Before the writing of subscription in arrears. So that value was given. Before writing of subscription. Before writing of this subscription. The requirement prepare the subscription account for the year. You can use the same subscription account. you can use the same subscription account. I'll draw it from the beginning, as is the question with subscription in advance. This is question number 8. Right. The question number 8, subscription account. Right. The subscription account, you can remember from the beginning I was explaining you the subscription account. Subscription account in 1000 rupees. The opening receivable, opening advance, the closing receivable, closing advance, the cash received or receipts and payments or cash. Then subscription written off. Subscription written off. And here you have income and expenditure. Income and expenditure account items you have. Income and expenditure you have. These are the items in a subscription account. Right. As you have the question with you, you can do it with me. The question number 8. Balances as at 1st January, opening balances, opening received in advance 6,000. Opening received in advance 6,000. Your credit is a liability. The subscription in arrears, opening arrears 9,000. Opening arrears 9,000 rupees is question number 8. The balances as at 31st December in advance 7,200. 7,200. In arrears 12,000, but it says refer 5 below. In arrears 12,000, it says refer 5 below. 12,000, we don't record it here. Why? There is a sub adjustment given. The 5th adjustment on 31st December 2020, that's closing date, 31st December 2020, the management committee decided to write off 8,000. To write off 8,000 from this. The write off 8,000, then the written off amount is 8,000 rupees. Amount written off is 8,000 rupees. Amount written off is 8,000 rupees. The closing closing advance, this is closing receivable. Closing receivable. The closing receivable. This is closing advance. This is closing receivable. Closing receivable. Now, out of this 12,000, you write off 8,000. Then the still receivable only 4,000 rupees. Only 4,000 rupees. Out of 12,000, 8,000 you write off, still receivable 4,000 rupees. It's clear now. Opening receivable, opening advance given correctly. The closing advance also no issue. closing advance also no issue. The issue is closing receivable. It's given as 12,000, but it refers to amount with arrears. Now 12,000 includes amount written off. You write off 8,000. The balance still receivable. Right. The adjustment number 3. During the year, the sports club introduced life membership fees. As next step, I'll explain you the life membership fees account. You'll keep that adjustment. And fourth adjustment, total subscription collected during the year. Total subscription collected during the year, cash received is 140,000 rupees. The cash received is 140,000 rupees. Now subscription account, you have 7 items. Of 7, now 6 are there. Then you can calculate the income for the year. You can calculate the income for the year. Opening receivable, opening advance, closing receivable, closing advance, cash received, subscription written off. You can calculate the amount income for the year. The addition comes to 158,000. The addition comes to 158,000. You can record it here, 158. Difference you can transfer to the income statement. 158,000. The 141,800 is the income for the year. 141,800 is the income for the year. This subscription account completely shows all items in an organization as subscription. Receivable, received in advance, receivable opening closing, advance opening closing, cash received, written off, and difference to income statement is subscription account. Right. And in this question, there is another part B, life membership fees account. The life membership fees account. The life membership fees account Right. And when I was introducing the lesson, I explained you in a non-profit organization, you have general membership and life membership account. The life membership also. This question number 8, part B, life membership fees account. The life membership fees account. Life membership. So in an organization, non-trading organization, you can identify 2 types of members. General members who pay annual membership fees, and life members who pay membership fees for advance only. Then no annual membership payment. Right. For this in this question, life membership fees is applicable for the adjustment number 3. Third adjustment. So during the year, the sports club introduced a life membership scheme and collected 100,000 rupees. Collected 100,000 rupees. We'll do in thousands. 100,000. When you receive this 100,000, double entry, cash account debit, life membership fees account credit. When you receive this, cash or the receipts and payments account debit, and you credit it here. Cash account debit, on the receipts and payment account debit, 100,000 you credit here, double entry. The policy of the club is to write off life membership fee during a period of 10 years. The 100,000 you received, but your policy is to write off within 10 years. You have received 100,000 rupees, but your policy is to identify income over a period of 10 years. Over a period of 10 years. So the current income 10,000 rupees to the income and expenditure account or to the income statement, you transfer 10,000. You received 100,000, you identify within a period of 10 years. You identify within a period of 10 years. The 100,000 for 10 years, so annual income is 10,000 rupees. The 100,000, 90,000, the balance carried down. The life membership fees account. Amount you received, cash account debit, life membership fees account credit. Then you divided it in 10 years time. You identify this income within a period of 10 years time, and difference you transfer as a carried down balance. Out of 100,000, currently you identify 10,000 as an income, balance you carried down for next financial year. Right. Now, life membership fees also we covered. Right. Then we'll go to question number 9. To question number 9. You can go through the question number 9. The following information is related to a subscription of a sports club. The number of members 100. Do you have number of members? We have 100 members. Do you have number of members? 100. The annual subscription per member 200. 100 members annually they pay 200. The balances as at 1st January. The balances as at 1st January. This opening balances. Opening balances. The subscription received in advance, open in advance, subscription account you credit. Open in advance, subscription account you credit. The subscription in arrears, subscription account you debit. The subscription arrears you debit. Right. Next point, 80 members have paid their subscription for 2021. Right. 2021 is our financial year. 80 members they have paid for our financial year during the year. Out of them 15 have paid for 2022. The 2001 is the current year, current year 2021 and the 2022 next year. So you can calculate total cash received. How? 80 members they have paid for current year. 80 members they have paid for the current year and 15 they have paid for next year. 80 they have paid for current year plus 15 they have paid for next year. Total cash received. 80 members, annual subscription 200 for current year, 15 members for next year. 15 members for next year. It's clear now. 80 members for current year, 15 members for next year. This is cash received. The next year mean close in advance. Cash receipts is clear now, Putta. 80 members for the current year, of them 15 for next year. Cash receipts is clear. 10 members have not paid their subscription for 2020 by the end of 31st December 2020. Out of them, 5 members not paid for last year 2020. The organization decided to cancel their membership. And to write off. Now their members' membership fees are cancelled. The membership also cancelled. You cancel the membership also. Now it's clear. You cancel their membership also. This judgment is clearly mentioned. Their membership was cancelled. 10 members they haven't paid for the current year. Of them, 5 members they haven't paid for last year. 10 members they haven't paid, of them 5 they haven't paid for last year also. The organization decided to cancel their membership. Now the membership cancellation also here. Now here we had 100 members. Now 100 members, 5 members membership we cancel. Organization they had 100 members, but 5 members membership we cancel. So then we have 95 members. We have only 95 members. Why? We had 10 members, 5 members membership we cancel. The 5 members membership we cancel. We have only 95 members more. To prepare the subscription account. A subscription account for this. But this is question number 9. You can again draw the subscription account. to question number 9. To question number 9, subscription account. The subscription account, you have we're doing thousands. The subscription account, we have 7 items. Subscription account: opening receivable, opening advance, the closing receivable, closing advance, the cash received or the receipts and payments account. The cash received or receipts and payments account. Then subscription written off, income for the year. Income for the year. Those are the 7 items you have in subscription account. 7 items you have. Right. We'll go one by one. Right. The following information is applicable: number of members, annual subscription, balances as at 1st January. 1st of January balances. They have opening advance. The opening advance, you have 2,000 rupees. You have 2,000 rupees opening advance. The opening arrears, you have 1,000 rupees. Opening receivable or opening arrears, you have 1,000 rupees. Fourth point, 80 members have paid their subscription for 2021 during this year. Right? So you can calculate cash received. You can calculate cash received. 80 members, they have paid for the current year. How much annual? 200 plus then 15 out of them. Out of them 15 members. 15 members. Out of them 15 members for next year. 15 members for next year. 80 members for current year. 80 into 200 plus 15 members for next year. Altogether, the total comes to 19,000. The total comes to 19,000. And the next year, the members they have paid for next year means closing advance. Right? Closing advance. If your members are paying subscription for next year, that is closing advance. How much is it? 200 into 15, 3,000. Closing advance, 3,000. 19,000 you have received during the year, of which 3,000 for next year. Right. The last point, 10 members have not paid their subscription for this year. Out of them, 5 have not paid their subscription for 2020. The organizer decided to cancel their membership. Right. And then the question beginning you says about 100 members. Now you cancelled the membership of 5 members. Originally you had 100 members, of them 5 members membership we cancelled. So we have only 95 members. We have only 95 members. The 95 members annual membership is 200. 95 members. Annual membership is 200. So your income is 19,000. Your income is 19,000. Originally you had 100 members. Of them, 5 members membership we cancelled, they are not members anymore. We have 95 members remaining, each at 200, so 19 is income. Right. The organization decided to write off their subscription also. How many members? The 5 members, 200. 1,000 you write off. 5 members membership we cancel. The 5 members membership we cancel, and 5 members 200 subscription written off. From how many members we can get more? We can get only from 5 members. You expect closing receivable. Then closing receivable is 1,000. Closing receivable is 1,000. How? 5 members, each 200. Altogether, you should receive 1,000 rupees. And this question is more balanced question. This question is more balanced. If you properly prepare, you can balance this account. This question includes all subscription part, receivable, in advance, cash received, written off, cancellation, everything, and the income also. Then see 23,000. The subscription account balance at 23,000. Why? All the adjustments were here. Logically, you can prove the entries. Subscription account. Opening receivable, opening advance, closing receivable, closing advance, written off, cash received, and income for the year. I think that by doing this question, you can cover entire subscription part. To redo this question, by doing this, you can again get a comprehensive knowledge on the subscription account. Why? It includes logically all items. Right. Up to now, we discuss all subscription, written off life membership fees, and cancellation, arrears, advance, everything. Right? And this question about entrance fees or admission fees. So this question is about entrance fees or admission fees. This related to an organization for the year ended 31st March 2021. $300,000 balance of the entrance fees account. This is opening balance. Entrance fees collected during the year. Cash collection. The entrance fees, cash collection, cash received. The organization policy is to identify 50% as an income, 50% as an income, and the balance in the next financial year. Right? So when you receive certain amount, now say 200 you receive, example, So 50% of 200 in the current year and the balance 50% in the next financial year. Right? Balance 50% in the next financial year. Right? When you receive 200, example, 50% is the current year income, their policy, next year 50%. Then you can assume how much you have received in the previous year. How much you have received in the previous year. So then 300 you have now. 300 you have now. Which means how much as a percentage? 50%. As a percentage, this is 50%. So 300 you received. 300 you received, that is 50%. Which is 50%. Why? Once you receive certain amount, you identify part 50% current year, balance 50% next year. So you have an opening balance 300 means, you have an opening balance of 300 means you have last year received. You have received last year 600,000. Why? 50% you recognize in the previous year, so current year 50%. Current year 50%. Then how much will be the income in this year? How much will be the income in this year? This year income will be, how much? Last year you received. The last year you received 600, or now you have 300. That amount we have to add. For that amount we have to add 50% on what you have received. So 300 you have opening balance mean last year you have received 600,000. So 50% last year, current year 50%, then plus 800,000 you received in current year, from that you take 50%. So from that you take 50%. This is the current year income. So 300 plus current year you received 800, of that 50%. Right? The question requirement is to prepare the entrance fees account. To prepare the entrance fees account. To prepare the entrance fees account, you can draw a T account. You can draw a T account. This is question number 10. You can draw a small T account. To name it as entrance fees account. Entrance fees account. We'll do in thousands. 1,000 rupees. Entrance fees account. There is a balance. The entrance fees account, you have a balance. You can write balance brought forward or opening balance. You have 300,000. 300,000. You have balance of 300,000. 300,000 rupees opening balance. Entrance fees collected during the year. Entrance fees collected during the year 800 rupees. Cash or receipts and payments account. Cash or receipts and payments account. The organizing policy is to identify 50% during the current year, balance 50% next year. 50% current year, balance 50% next year. So last year you have received 300. Last year you have received and from that you have 50% for the current year plus 800 you have received in this year, from that 50%. From that 50%. The 300 plus, out of the amount you received 800, 50%. So your income is 700 rupees. Your income is 700 rupees. For the current year income, you transfer 700,000 to the income statement or income and expenditure account. To the income statement or income and expenditure account, you transfer 700. Then the total 1,100,000, 1,100,000. The carried down balance. The carried down balance. The carried down balance 400,000. The carried down balance is 400,000. Out of this, this 400,000 carried down balance carried down. Employee disorganization. Disorganization, as they take 50% as the current year income, balance 50% next year. Balance 50% next year. So you have received 800, so this is the 50% for next year. That is the 50% for next year. The entrance fees account. Mainly we discuss all the areas and subscription, life membership fees, entrance fees, subscription written off, all the areas. Right. And we will do more questions. We will do more questions by covering these subscriptions. Right. The question number 11. Question number 11. Right. Here, MCQ question to select the answer. To read it, but there are 250 members. 250 members in a library. The 50 members, out of them are life members. So you have 250 members, of them 50 are life members. So there is 250 members. The 50 are life members mean 200 general members. It's clear now. You have 250 members. 50 are life members. The 50 are life members. Then the rest should be. The rest should be general members. 250 life members, 50, 200 general members. This annual subscription per member is 200. Annual subscription per member is 200. And 22 members, they have not paid for the current year. Annual members membership fee is 200. Then 22 members, they haven't paid. The 6 members have paid for next year. For next year. The balance of life membership fees account as at 1st April was 24,000 and 10% was transferred to the income and expenditure account. Right? Life membership fees account, you have a balance of 24,000. You have a balance of 24,000. Of that, 10%. Of that, 10% you transfer to the income. The 24,000, 10% is 2,400. 24,000 you have the balance in the life membership fees account. 10%, which is 2,400, is transferred to the income. And the question requirement. The question requirement, calculate the subscription income and received by cash. Here subscription income refers to the both general members and life members. In the category we divide into two, life members and general members, but in the recognition of income you consider both life members and general members. You consider both life members and general members. You have to calculate the subscription income for the year. Subscription income for the year and cash received. Subscription income for the year and cash received. So here you have two types of members. Here you have two types of members, general members and life members. But in the recognition of income, you identify both general members and life members. The organization, you had members who are paying annual membership fees, those are general members, and you have life members with a balance of 24,000 rupees. You have to identify income for the year. We are in question number 11 now. So question number 11, question was two requirement. One is income, the other one is cash received. Income and cash received. Income and cash received. Income and cash received. So there are 250 members, 50 are life members. Income recognition will take life members. Life members. From life members, question says 10%. 10%. The life membership fees fund, you have 24,000. Of that, 10%. That is 2,400. Right? The life members, you have 50 members. You have 50 life members. Life membership fees fund, you have 24,000 rupees. You have 24,000 rupees. Of that, 10%, 2,400. The life membership fees fund, you have 24,000 rupees. Of that you transfer 10%. Of that you transfer 10%. And the general members. The general members. So all together you have 250 members. Of that, 50 are life members. All together you have 250 members, of them 50 are life members. So you have 200 general members. 200 general members. And the question says annual membership fees is 200 rupees. Annual membership is 200 rupees. 200 members at 200, annual membership fees amount is 40,000. Then the amount is clear. The membership fees income is 42,400. Membership income is 42,400. The 42,400 how you get? From the life members 2,400, from general members 40,000. So altogether 42,400 is the income for the year. Right. The total income recognized 42,400. Then the cash received. You can calculate the cash received. Right. The life members you don't get cash. Why? There is a life membership fund of which 10% you transfer to the income, then you don't have any cash from life members. The cash received for the year. Right. And this cash received you can calculate for the current year. For the current year receipts. So altogether you have 200 general members. Of them, 22 they haven't paid. So then you have only 178 members. The 178 members each at 200. 178 members each at 200. You have 35,600. 35,600. Six members have paid their subscription for next financial year. 6 members they have paid for next financial year. For next year you have received from 6 members. So 6 members each at 200, 1,200. So altogether 36,800 rupees. The cash received is 36,800 rupees. For current year you have received from 178 members each at 200. Total comes to 35,600. And for next year from 6 members 200, addition comes to 36,800 rupees. That's the cash received and subscription income for the year. Income for the year and cash received. The answers, so this is 42,400 income 42,400. The cash received 36,800. Answer number 4. Fourth answer. Right. To question number 12. The statement of financial position of a non-profit organization was given below. the non-profit making organization, statement of financial position. Then you have library building, asset part, 75,000. Then you have current assets, 140,000. Total assets, 215,000. Accumulated fund, 125,000. In addition to that, you have a library building fund and current liabilities, 15,000. So altogether, assets equal equity plus liabilities. Right. Then there is an adjustment given, 25,000 rupees. 25,000 rupees of library building fund has been utilized for the construction work of library building. 25,000 of library building fund has been utilized to construction work of library building on this date. If there were no other transaction, you have used 25,000 rupees. 25,000 rupees. If there were no other transaction, which of the following reflects the financial position of the society? You had done only one transaction, that is 25,000 building fund was used. You have spent 25,000 to construct the building. Right. Now, if you write the double entry, for this, 25,000 you use. Then for that double entry, if you write the double entry, you use 25,000. We are in question number 12. If you write the double entries, question number 12. The 25,000 of library fund has been utilized to construct the building. The construction of building. So as a double entry, you have used 25,000. Construction of building, you have used 25,000. So as a double entry for that. Double entry, the building debit, the building account debit 25,000 rupees and cash account credit 25,000 rupees. Right. Building account debit 25,000 rupees, cash account credit 25,000 rupees. Building debit, cash credit. Right. And so when you are building in this organization, you have a building fund. Note that same amount you used, you have to transfer to the accumulated fund. Amount used. The amount used you transfer the accumulated fund. How much you have used? 25,000. This organization, you have building fund, library building fund. So building fund debit 25,000, building fund debit 25,000, you credit accumulated fund. Accumulated fund credit 25,000. If you take the double entries, this is how you record the double entry. Amount you spent to construct the building, building account debit 25,000, cash account credit 25,000. The amount you used The same amount you transfer to the accumulated fund from built-in fund. So from the built-in fund you transfer to the accumulated fund. So then built-in fund account debit, accumulated fund account credit. The built-in fund debit, accumulated fund credit. Right. And if you update these adjustments, right? If you update this adjustment in this financial position, right? If you update this adjustment in the financial position, first you use that the cash credit. The cash credit means current assets decrease. Right? Cash credit, current assets decrease, and built-in value increase. The built-in value increase. If you update this double entry, cash credit, current assets, cash is a part of current asset, current assets decrease, cash decrease, and built-in value increase. The built-in value increase. Then the adjusted value, 100, cash 115, cash 100, current assets become 115, cash become 115, then the balancing value 215, 215, asset side. So then the same amount you utilize. The amount you utilize you have to transfer to the accumulated fund from the built-in fund. Right? So you have used 25,000 from the built-in fund. So built-in fund minus 25. Same amount you add or transfer to the accumulated fund. Amount you use from the specific fund, you transfer to the accumulated fund. Now the adjusted values, this become 250. So this become 150. How 125 you had earlier. Now 25 came from the 25, it becomes 150. Then your library built-in fund value minus by 25. Why? You utilized 25. Then it becomes 50. So no change in this current liabilities. So no change in current liabilities. So again your financial position balance at 250. 250. Right. So out of the answers given, answer number, the answer number 1 is the correct answer. It says accumulated fund 150, correct. Built-in fund 50, correct. The current liability is 15, correct. The library built-in becomes 100, correct. And the current assets become 115, correct. 115, correct. So then answer number 1, the first answer is the correct answer. The first one is the correct answer. Out of the answers given, first one is the correct answer. The adjusted values. First one is the correct answer. Right. And from this non-profit organization lesson, we'll go through recent past paper questions. The recent past paper question, and I selected the 2019 one and 2020 A-level question. the 2019 A-level question and the 2020 A-level question. So this is 2019 A-level question. This is 2019 A-level question. The 2019 A-level question. Right. We'll read it. To go through it. A welfare society had 150 members. During the year, annual subscription per member 2000. The organization had 150 members. Annual subscription is 2000. If the income is clear, 150 members at 2000 is your income. This is 2019 A-level question. 150 members, each 2000 annual subscription income. The cash received for the society. Cash received. So these are cash transaction. The cash received. So these are cash received. The subscription received for the current year 200. Current year 200. Now the subscription income for the year how much? Income is clear. How much? 300,000. 300,000. Income for the year is 300,000. Now 300,000 you received. 300,000 you received 200,000 means 100,000 still receivable. 100,000 still receivable. 100,000 still receivable. Why? The total income. The total income is 300,000. Of that you have received 200,000. 100,000 receivable. 100,000 receivable. Donations. The donations you have received. But still we don't know what's the policy. Donation you have received 250,000. 250,000. We don't know about the policy. How they recognize donations. Right. The proceeds. The proceeds mean receipts. The proceed of the fixed deposit matured 560, of which 60,000 represent interest income. It has been recognized in the 2018. Right. From your fixed deposit you have received 560,000 rupees. You have received 560,000 rupees. 60,000 is interest, but it has been recognized in the previous year. 560,000 is the amount you received, proceeds received, proceeds, receipts. From this fixed deposit 560,000, of which 60 is interest, but is for previous year. 2018 is, if you compare these two financial year, this is 2019 last year, this is 2018, this 2019 current year, this is 2018 last year. So this interest income is applicable for the previous year. Right. Now earlier we had a donation. The policy of the welfare society is to recognize donations as an income, equally over a period of 5 years. Right. the donations you have received 250,000 over a period of 5 years. Now the current year income is how much? Current year income is 250,000 5 years. So current year income is 50. Current year income is 50. The requirement, the income recognized and increase in asset. This question wants two requirements. The question wants two requirements. One is income for the year. One is you have to identify the income for the year. The other one is increase in asset. This is question number 13 to 2019 A-level question. 2019 A-level question. The question has two parts. One is income for the year. The other one is increase in asset. Right. We'll first calculate income. Right. And this organization you found two sources of income. One is subscription. How many members? 150 members. 150 members. Membership fees per member is 2,000. Annual membership is 2,000. 150 members, each at 2,000. 300,000 rupees. 300,000 rupees. Right. That's the one source of income, subscription. Then in addition to that, you have donations. Donations income. Right. The club has received 250,000 rupees, but they say annually within a period of 5 years. You have received a donation of 250,000 for a period of 5 years. So current year income is 50,000 rupees. So the income for the year is 350,000 rupees. Income for the year is 350,000 rupees. Subscription income 300,000, donations annually 50,000 rupees. So the total income is 350,000 rupees. Now one part of the question is clear. Income for the year is 350,000. But there is another part, increase in asset. Now income is 350,000 rupees. The income is 350,000 rupees. Income 350,000 rupees. 350,000. Now the next steps to calculate increase in asset. Increase in asset. The assets. Assets increase. Right. And then you received subscription. When you receive subscription, your cash increase. The cash increase due to subscription. How much? Subscription received during the year is 200,000. Subscription received 200,000. As a result, cash increased by 200,000. And you have received donations. Due to donations received, again your cash increased by 200,000. 250,000. 250,000 you have received donations. You have received donation 250,000 rupees. As a result, your cash increase. Your cash increased by 250,000 rupees. Right. And this says proceeds from the fixed deposit. Proceeds from the fixed deposit. That when you receive that cash increase, fixed deposit decrease and interest receivable decrease. Overall impact is 0. This you no need to consider. If you have a doubt whether we take cash received from fixed deposit or not, even you take that, overall impact for asset is 0. Why? When this fixed deposit money is received, cash comes in, assets increase, fixed deposit decrease. The fixed deposit asset decrease and interest receivable asset also decrease. The overall impact is 0. You no need to consider. And subscription receivable. The subscription receivable. How much was the income? We calculated 300,000. 200,000 received. 200,000 received. Now you have to receive still 100,000 rupees. Still you have to receive 100,000 rupees. Out of 300, $300, 200 received, 100,000 receivable. Right. So altogether, your assets increased by 550,000 rupees. 550,000 rupees. 550,000 rupees increase in asset. Due to subscription, your cash increase, assets increase. Due to donations received, cash increase, asset increase. Due to subscription receivable, your asset increase, receivable in arrears asset. So again, if you have a doubt on this cash, if you have a doubt, why didn't I take proceeds from the fixed deposit received? It has no impact on your asset. It has no impact on your asset. Why? Cash received, the cash received how much? 560. 560 assets increase, your 500 fixed deposit decrease, interest receivable decrease, overall impact is 0. Overall impact on assets 0. Right. 560 minus 500 and minus 60, overall impact is 0. Right. And the last question I decided to discuss with 2020 A-level question. 2020 A-level question. This is 2020 A-level questions. Right. The subsidy income recognized 300,000. Previous year arrears written off. The arrears written off the arrears written off. Donations received to purchase sports equipment. 100,000 was used. 100,000 was used to purchase this. Balance amount received during the year. Balance amount received during the year. Hiring of playground. The advance of 150,000 was received in the previous year for this project. The 150,000 was received. The subscription income recognized. The arrears written off. Donation received to purchase sports equipment. Balance received from a hiring of playground. The policy of the sports club is to recognize only the utilized amount as an income. Only the utilized amount as an income. Right. Then requirement, the increase in the accumulated fund. Accumulated fund, increase in the accumulated fund. In other words, you can calculate surplus and the amount increase in the accumulated fund. Right. Income recognized, yes, we take as an addition to the accumulated fund. Is an addition to the accumulated fund. You plus it. Right. Then subscription written off. The subscription written off is a loss. Your accumulated fund will decrease. Accumulated fund will decrease. Then the donations received. Donations received, you should identify the policy. They say amount utilized is recognized as an income. You have received donations 500, but you identify only 100,000 as an income. This 100,000 as an income. Then the hiring of playground, you have received this year 100,000 and balance was received in the previous year. You have to add these two also. You have to add these two also to identify the amount increase. Then the amount increase in the accumulated fund you can calculate. This is the last point. The question number 14. If you take one by one, subscription income. The subscription income 300,000. Subscription income 300,000. The previous year subscription in arrears written off. The subscription written off is a reduction of your accumulated fund. It's a reduction of your accumulated fund. 50,000. Reduction. And the donations. Donations only utilized amount. Donations only utilized amount, which is 100,000. And hiring of playground, the playground income, ground income, we take total income. So we take total income. We take total income, which is 100,000 received, 150,000 have received in last year. So altogether total income is 250,000. 250,000 is an addition to accumulated fund. 250,000. Now the increase in accumulated fund is the addition. The accumulated fund increased by 600,000. accumulated fund increased by 600,000. The subscription income 300,000, accumulated fund increase. Life membership written off, subscription written off, accumulated fund decrease. Donations, only the amount utilized, and playground income. This year you have received 100,000, last year you have received 150,000. So the answer is answer number 4, 600,000. Right. And we discuss non-profit making main areas all with the questions, and if you got knowledge about this, I think the Bank of Ceylon will be happy, as they have initiated this NanaJaya project, and by targeting our future generation, as you are our future, by targeting you, this is another social responsibility project of Bank of Ceylon, and they target you as you are our future. Right. Then we discuss unit number 8. Under this project, until we meet during another series of seminars with another topic by targeting our future advanced level examinations. Then I'm going to stop the lesson. Thank you very much for submitting. Stay safe and bye bye.